Good day everybody, it's your guy here, the unknown, and today I want us to look at something very important. I want us to look at the most explosive trading strategy for indices. And I know most people are struggling here and there, and it's only a small thing that's actually making people to struggle. It's actually patience, and today I'm going to try to explain as much as I can and make this detailed as much as I can. Okay, so this video is going to be divided into two parts. We're going to go to the charts, see how this week has traded so far relative to the strategy. Secondly, we're going to do a test together in real time to show you how you should actually tackle the strategy. And then thirdly, I will talk a little bit about psychology, because I see this affecting a lot of traders through the emails that I'm receiving almost every day. Okay, so guys, with this strategy, it's straightforward. Okay, this strategy gives you all the freedom you need. Okay, because you only come to your charts 9:30 US time, which is 3:30 p.m. South African time. You have all the freedom to yourself. You can do whatever you want to do with your day. Only come to your screen 9:30 or 3:30 p.m. South African time, and the goal is you're gonna spend less time on your charts, and that's the most important thing. Because if you come early, you take losses. By the time you come to the US session, you're gonna be tired or already angry or frustrated because of the loss you took earlier on, and you're gonna be more biased when you come to the charts. Okay, so guys, remember, less is more when it comes to trading. Okay, so when you come to the screen, these are the things you're gonna look for. You're gonna come 10 to 5 minutes before the equity opens, and you're gonna identify trade volume before the session. This is important, and people tend to avoid this. Remember, you need roughly 65 to 70 pips before they could go all the way to releasing those who are trapped, because indices are going to spend almost the entire day trapping. So there are days when they are not going to release those who are trapped. Anyway, I'll talk about this when we go to the charts. The second criteria is to wait for the equity opening time. It's 9:30 US time and 3:30 p.m. South African time. Do not do anything until this time. Okay, do not enter until this time. If you take a loss, it's on you. Okay, and then we are going to identify trapped volume during the session. That's once the US equity opening time has opened. Okay, so we're going to identify trapped volume, and for this we need a chart pattern. Why? Because a chart pattern tells us what the insiders have been busy with. Remember, we don't know what prices are going to do. Okay, only insiders know what they're going to do on the day, so we're going to rely on the information they generate for us. So cease from coming to the market with a mind that says today we're going to be buying or today we're going to be selling, because in reality you don't know what you're going to be doing on the day. Only insiders, market makers, they are the ones who know, because they are the ones who move the market. Okay, and then once you've seen a chart pattern which tells us that they've trapped, everybody inside the pattern is trapped, we want to see an evidence candle, which is the big candle that breaks out of the pattern. Guys, people are making a lot of mistakes on this point. Sometimes they'll give you a very big candle that breaks out, and just when there's 5 to 15 seconds left, they pull back and that candle closes as a pin. That's not an evidence candle. An evidence candle is the big candle that breaks out of the pattern. That simply means it's the candle that closes as a breakout candle, and it must be a big candle, of course. Okay, so wait for that candle to close. Okay, and then we enter and target 50 pips. People tend to be greedy. Guys, I told you, if you want to take more than 50, open two positions. One position should take profit at 50 and the other one could just run. Okay, because there are days when the market will keep on going and going and going. But for me, strictly 50 is enough, because that's something you do repeatedly, day in, day out. Okay, and another point is always ask yourself what kind of trend you are in, because you might be in an explosive trend, and if you haven't identified that, you might see a reversal pattern which will end up punishing you, because you didn't pay attention to the fact that you were in an explosive trend. Guys, in the book below, in the playbook, you have all the patterns you need. In my recent videos, you have all the patterns that you need. You have all the trends that you need. I've tried to make this as easy as I can, but people tend to forget about that. Guys, if you ignore any part of this, you are gonna pay the price. Because what I've seen is people look for this. This is what people are interested in. People want to wait for the equity to open, identify the pattern, evidence candle, that's it. That's not it. You have avoided or ignored part of the strategy. Remember, if you are trading the strategy, it has criteria, and the important things you have to pay close attention to. Okay, so please don't ignore any of this, because people tend to ignore this one and end up paying the price. That's when you start giving up and thinking this is not working. Look at this, guys. We're gonna go through the charts as I've said. Step number one, identify trap volume before the session. You do this roughly 10 to 5 minutes before the US equity time, right? Look at this. This is step one. You identify trap volume. You can see most of the time they're gonna trap on the closing price because indices are gonna consolidate most of the days around the closing price, and then they can break out roughly few minutes or an hour before the equity opens. Okay, so when you look at this trade, the session is opening here. Everybody who went up is literally trapped. So from where the pattern is building or from where the session is opening, it depends on which one comes first. Okay, look at this. You need to have at least 65 to 70 pips. I put this here. You need to have roughly 65 to 70 pips until they can release the trap, guys. So look at this. This is where they're giving us a double bottom. So from where they're building the pattern, we need to at least have 65 to 70 pips, okay, until they can release all these trapped guys, okay, which is highly important. If you look at Monday US 30, we had roughly 120 pips, okay, so we can take this trade because most of the days this is what they're gonna do. Okay guys, let me just show you what they're gonna do because this is important and this is what people tend to ignore. Okay, this is what people tend to ignore. Look at this, guys. Look at this. Look at this. They're either gonna come, okay, sorry, they're either gonna bring you into trap volume and reverse without releasing trapped guys. That's what they are gonna do most of the days. However, because markets are not perfect, we know that they are not perfect, so they can do this again. Okay, they can actually lead you up, stop hunt these guys, and then reverse. Okay, so this is something they are gonna do again. Okay, so there's always one of three things that markets are gonna do always. Okay, or another scenario is where they will come and break out. Okay, so if I'm gonna take it up, mostly if I don't have enough space here, what I'm actually gonna do is I'm gonna wait for them to build another pattern after trapping volume, and that's where I'm gonna take it if I don't have roughly 65 to 70 pips. Okay, because you want to be sure and you want to take a trade that gives you the most highest probability. Okay, this is highly important, highly important. Okay, so guys, look at this. We had over 100 pips for them to release this guy, so obviously we have enough space for our 50 pips, right? We have enough space for our 50 pips, so we can take this one. What did they give? They gave a double bottom. Oh, this is fine. I don't like double bottoms that much because for me it's not enough trap volume. But look at this candle that broke out. Look at this candle. This is a candle that closed as a breakout, and you can see this candle is obviously going. So this is where you enter. Okay, because this is the trade I took on Monday. Okay, and 50 pips got hit quite quick, roughly 9 minutes. So guys, look at this. You only come roughly 10 to 5 minutes before your session begins, and in less than an hour you are done for the day. Guys, if you close your charts, come back tomorrow, because if you're gonna stay long enough to take another trade, you're gonna end up giving back what you've given to the market. Guys, the markets or trading is not about becoming wealthy overnight. No, it's about consistency. You are taking wins, loss, wins, loss, wins, loss, like that. You need consistency over time to make large amounts. Okay, which is what people are not willing to hear, which is what people are not willing to know. Okay, people want to think that okay, today they'll come and make millions of dollars. No, it's not gonna happen like that. You need to gain the right experience over time. Consistency gives you experience and confidence. Okay, so you see, this one was the one I took on Monday. When you go to S&P 500, oh guys, I love this. When you go to S&P 500, same thing we're gonna do. We're gonna identify trap volume. Sometimes you'll think that trap volume is actually working against you, but I'll show you that it works in your favor. Okay, look at this. All the guys up here are trapped when the session is opening. Okay, when the session is opening. Okay, so look at this. They give us a pattern. I told you some days they are gonna actually build a pattern before the session opens. However, the pattern must complete when the session has opened. So I told you, avoid the first candle, avoid the 9:30 candle. Why? Because most of the time it's going to be a stop hunt. This candle started by going down. Those who took it obviously were wrong. Why? Because avoid the first candle. It's mostly going to be the biggest candle and a stop hunt most of the days. Okay, so avoid this first candle. I've been saying this and saying this and saying this for the longest time. Avoid the first candle. So guys, if you avoided the first candle, you would have known that okay, the second candle became a breakout. You can see this is a breakout. This is a candle that closes as a breakout. Okay, when this candle closes, okay, for those who want to use the EMA, you can use the EMA, okay, just to confirm your trades. But look at this, look at this. When you actually count from where the pattern was building up, we have roughly 65 pips until they can release the trap, guys. Okay, we have roughly, from here we have roughly 66 pips, which is above 65 pips. So we have enough space for 50 pips. Okay, this is a trade you can take. Why? Because we have enough space for 50 pips. In case they are not going to release this, guys, we have enough space. In case they are just going to stop hunt, we have enough space. In case where they're going to break out and trend, we have enough space. Remember, you need to have high probabilities on your side. You need to take a trade that gives you high probability. The edge must be on your side. And there's always three possibilities to what the market will do. Okay, so you need to be on the positive side or on a side where you have high probability. So you can see now with over 65 pips, you take this trade, 50 pips is actually hit in 16 minutes, which is less than 30 minutes. I told you most of the days they're gonna hit your take profit in less than 15 minutes, but there are days when they'll go all the way to 30 minutes, which is the limit for me. That's where I draw the line. If you haven't hit my take profit after 30 minutes, I close the trade. But obviously for me, I just come after an hour. Okay, that's a practice that I'm used to and I enjoy it that much. So if I come back after an hour, they haven't hit my take profit, guys, I'm gonna close the trade. Okay, because this is explosive. So you see, this was a good one as well. What did I say? Compare. This is important, guys. Don't get married to a certain asset. Don't say you love USDT too much. No, I love it, but I'm not married to it. I'm gonna compare each and every day and I'm gonna take the easiest one. That's why even if you go to the community to look at my previous trade, you realize today I take USDT, tomorrow I take USDT, the next day it's S&P 500, the next day it's Nasdaq. That's the reason is I want the easiest one on the day, and that's the one I'm gonna take. Remember, the easiest one on the day, that's what I'm gonna take. Now let's go to Nasdaq. And guys, I know I told you can take two positions. One can hold, but you need to get paid. Okay, you need to get paid. Okay, so guys, always make sure of that. And then when we go to Nasdaq, same day, guys, Nasdaq and S&P 500 are mostly correlated. However, this since last week, there are days when they are not trading in a correlated way. So when the session opens here, when the session opens, these guys over here who bought are literally trapped. Okay, so we're gonna see if we have enough space. Okay, enough space. So from where the pattern is building, some days, yes, the pattern is gonna build from before the session, but it must complete during the session. Okay, so guys, you're not always gonna get beautiful trades immediately when the session open. If you do that, that's good. Take it, get off your screen. Don't stay long enough. So again, this is the high. For them to release the trap, guys, they have to at least surpass this level here. And that's where we need at least, from where the pattern is building, we need at least roughly 65 pips. On this day, we didn't have that. We didn't have that. We had 36. So you can see when you are comparing, US30 was the best one. Why? Because we had enough for 50 pips. And then S&P 500, again, yes, it was fair because we had enough, but on Nasdaq we didn't have enough. So when we don't have enough like this, what I do is I will want them to build another pattern after breaking out, or I will want them to build another pattern below. Okay, that's obviously after breaking this pattern here, because I don't want to see a pattern and then see another pattern that says reverse. No, I don't want to see that, because mostly that's gonna be threatening you out of a winning position. So if they're gonna build up another pattern, I want it to be below this one, okay, for me to take it as a sell or whatsoever. Okay, I don't want them to give me a pattern and then few minutes, maybe 5 minutes later, they're giving me another pattern which breaks out to the downside. I'm not gonna take it. I'm gonna ignore it, okay, because I know that they will most likely threaten those who took the best trade. So if you look at this days here, you can say, if you take the body, you can see something like this here. This is the patterns that I love, okay, the right angles or the symmetrical or the head and shoulders, okay, or the rectangle. My favorite is a rectangle, okay. So if you look at this right here, they gave another pattern and they broke out of this pattern. This is one of the beautiful trade, okay, you can ever take, okay, because here we didn't have enough space. I will want to see another pattern after they've broken out, given the scenarios that I've told you. Some days they're not going to release, some days they're going to stop hunt, and other days they're going to release and trend, okay. So if they release, I want to see another pattern for me to become comfortable, okay. As you can see, this one roughly went to 50, okay, roughly went to 50, even though it took a little bit too longer, okay. So I believe you saw here, it looks like trade volume worked against you, which is why most people tend to ignore it. But guys, this works in your favor most of the days. Let's go to the second day. We're gonna start from the same S&P US 30, and guys, I told you, compare and take the cleanest one on the day. Don't get married to a certain index or currency or stock, because if you get married to it, you're gonna force it to give you trades even though there are no trades on the day. So if you look at this day, this was the most craziest day. They just went up and they kept going up. So once, I don't love having a big box like this, because as I said, most of the days they're just gonna consolidate on the closing price. So on this day, when you look at trade volume, okay, let's just identify, but I don't like it when the box becomes too big, becomes more than 100 pips. So when the session opened here, we can see that this, okay, everybody in this box is trapped. So let's look, everybody in this box is trapped. The session is opening here, we are avoiding the first candle, then we are looking for the pattern. They take us down, okay, nothing much, because they're taking us into trade volume. What did I tell you? I told you most of the day they're not going to release them. So if you get an opportunity to the downside, if you look here, they just pinned. Why? Because this is a stop hunt. What did I say? There's always three scenarios to what the market could possibly do. There's always three scenarios to what the market could possibly do on the day. And when you are building a strategy, you want to make sure the odds are stacked on your side, okay. So that's why I said always try to avoid trades where you don't have more than 60 roughly 65 to 70 pips going up. Why? Because most of the day they're not going to release them. So if this when this session opened, we had roughly 61 pips, oh, which was good. But look at this, they went down. We didn't have enough volume, we didn't have, I mean, a chart pattern, okay. They went up, no chart pattern at this moment, okay. They went up, no chart pattern. They went up, no chart pattern. Okay, maybe some people saw a rectangle. I don't even know if you saw a rectangle, how it should be structured, but let's say maybe you saw, again, maybe you saw this rectangle here, okay. Even if you saw this rectangle and this is a beautiful breakout candle, look at this candle. This candle is a huge pin candle, which simply is, or might mean that they've stop hunted everybody from above, okay, because when they give you such a big pin, it could be a stop hunt above. So guys, if you took this one, again, this candle invalidated everything, and on this day we didn't have a clean pattern. Okay, maybe you saw this as a pattern, but you can see that, guys, even here, where is that engulfing candle that breaks out? There is no such huge engulfing candle that breaks out, okay. And if you looking at this one, the best evidence candle is the engulfing candle that breaks out on itself, okay. Here they gave us too many candles before they could give us this one. So this day they didn't really give a good pattern, okay. They didn't really give a good pattern. Now let's come to S&P 500, okay. S&P 500, we're gonna follow the same criteria every day. And guys, I know most of you don't like identifying trade volume before the session, okay. And the reason I'm not talking about the kind of trend is because one of the best trend you can see before the session opens is the explosive trend, and we haven't seen it here, okay. We haven't seen it here. The explosive trend is identifiable using two trend lines, okay. So we haven't seen it up to this moment. We haven't seen it up to this moment, okay. So when the session is opening on S&P 500, Okay, for us to release these guys, we need at least 65 to 75 pips. So we're gonna calculate how many pips we have. We're gonna calculate how many pips we have. Here you can see they're bouncing on the line. They give us something like a double bottom. This is still not clear. This is still not clear. Okay, but let's see, do we have about 60 pips? Yes, we have over 90 pips, and to a point whereby we can release these guys. So if they give us an opportunity, we can take it. Okay, so this is the one I took. Okay, this is the one I took. I haven't posted it in the community, but I can post it in the community. This is the one I took on Tuesday. Okay, I took this candle over here. I took this candle over here. Okay, and obviously I told you my stop loss is from 15 to 25 pips. Okay, 15 to 25 pips. You see 15 pips is below this candle, below this candle. Okay, 15 to 25 pips. I usually used to take them at 10 pips, but I don't really love 10 pips these days, because as you trade over time, you then see what the market is doing. Okay, so look at this. This is below this this candle. As you can see, it had a pin. Okay, it had a pin. Okay, and again, even your EMA is in alignment with this move. Okay, so you saw they gave us a right angle triangle. This is the one I took. Okay, this is the one I took. And again, even after even when taking this one, I still had more pips for 50 pips until they could release these guys. So this trade actually gave me 50 pips before they could release trapped guys. That's what I want to see. Okay, if I don't have enough space, I'm obviously gonna wait for another pattern if they broke out, or another pattern once they come below this pattern, because I don't like it when they give me a pattern here and then a few minutes after they start giving me a reversal pattern. Most of the time that's gonna be just to scare you out of the first trade that you took. Okay, so guys, this one was a very beautiful one. So comparing it with US30 didn't give us anything clear. Okay, so that's why I tell you, some days you'll see that I took S&P 500, sometimes I took US30. Okay guys, I always take the easiest one. Okay, I compare them, and then I compare Nasdaq on the same day, because as they are trading, I'll be watching them at the same time. I'll see all of these things happening. Okay, I'll see all of these things happening. So that's what I want to see, because I don't want to get married to a certain index or a certain currency or stock, whatever it is. Okay, but I trade indices. Okay, I used to trade a lot of currencies. I do sometimes, but rarely these days, because I mostly wait for the equity opening time, because this has been the easiest kind of strategy for me. So you look here. Okay, yes, this is a double bottom, but it's not that clean. Okay, do we have enough pips in case they give us a pattern? Do we have enough pips for 50 pips? Okay, let's see. From here, where we can say the pattern was building up, we had 49. So this one is obviously not a good trade, because we don't have enough space for 50 pips. Okay, we don't have enough space for 50 pips. Yes, of course they can break and keep trending, but remember I told you 3 scenarios. Okay, they can lead us up and then trap us, and we will become part of this guy's trapped here, because indices will spend the entire day trapping. So most of the day they are not going to release those who are trapped. So this wasn't a good one, because you can see from where they're giving a double bottom, we don't have sufficient space for 50 pips. It's roughly 40 something pips. Okay, 40 something pips, as you can see. Yes, okay, it's saying 50 pips, but it's still okay. It's not enough for us to take this trade. Okay, and again, the pattern wasn't so obvious. We need a clean pattern. Okay, we need a clean pattern, because again, if it's a double bottom, it's gonna actually have to start from here. You see, double bottom, this is where the neckline is gonna be. Okay, so guys, this wasn't a good one for me, so I took the one on S&P 500. As you can see, some days will just be untradeable. Some days you will find one index giving you the best setup. Some days all the indices will give you the same setup, and take the one that is gonna give you the best risk reward ratio if they all give you a setup. Okay, so when we come to Wednesday, we are almost done, guys. When we come to Wednesday, we're gonna compare again. I told you it's all about comparing. Compare. On this day, on Wednesday, you can see, like, okay, we can't say this is trap volume, because they trended, and the session is opening inside. So we can't tell if these guys are trap or these guys are trap. And I told you, even if we can't identify trap volume, we can still continue looking for other other criterias, okay, because this is the one we can trade without if it's not there. But if it's there, we have to bring it into consideration because it now becomes part of the equation, okay. But for these other ones, this one is a prerequisite for this one is a prerequisite for this one is a prerequisite for this one. So you can't get here until all these check marks have been ticked. And I've seen most people sending me trades, sending me emails, but the prerequisites haven't been met. So guys, make sure when you're taking a trade, you are taking the cleanest one. So on Wednesday, I didn't take a trade because we had news later, and I just saw that these are not building the best pattern, even though this one built something like a good pattern, but it wasn't a clean pattern for me, because when I take a right angle triangle, I need the one where they start playing from here, okay. So this one wasn't the cleanest one. Yes, there are people who took it, well, it worked for them, okay, but for me it wasn't the cleanest one. Yes, it was inside the EMA, everything was good, but the pattern itself wasn't good, okay. But if you took it and it paid, then okay, it's good. But remember, it's all about taking the good trade every day. You're gonna take trades sometimes and lose them, but take a good trade. At least make sure all the criteria are met. So even if you lose when all the criteria have been met, because some days you will, okay, you can't ignore or avoid losses in trading. The moment you start avoiding losses or trying to make sure you don't take losses, that's when trading stops for you, and that's when everything ceases to actually it ceases from working. Because the moment you try to avoid losses, your career as a trader is dead, okay. It's dead. It's just a matter of time that's going to prove that, because you must actually be willing to take losses, good losses. And good losses are losses that you incur after all your criteria have been met, okay. So if you're trading this strategy, make sure all these criteria have been met before you take the trade. And if you lose it, it's a good loss. But if you take a trade, you don't even have an evidence candle, or this candle actually became a pin, that's not an evidence candle. Guys, you're impatient. You see them breaking out and giving you a big candle, and now you want to be part of it just because it's a big candle. No, wait for that candle to close. This is only a 1 minute time frame, guys. Just wait 1 minute to be sure that this is an evidence candle, because most of the days it's going to close as a pin. So on this day, again, when we go to S&P, you'll see why I didn't actually take a trade, because I was comparing these things. And okay, for trap volume, you can't even see because the session is opening in the middle. When the session is opening in the middle, we don't know who is trapped, okay, because those below could be trapped or those above. So we don't really know who is trapped, okay. So even on this day, guys, they really didn't give a good pattern, okay, because some could have said, okay, well then this candle was a breakout candle, but it was not really a breakout candle, because okay, if we can pull it through, you can see that okay, this is where the neckline was. So this candle wasn't an evidence candle at all, because it's not that big breakout candle that actually broke out. And even if you look at the next one, it closed with a pin below. So this is mostly a dodgy candle. So you can't say, if you saw a right angle triangle here, yes, it's good, but this wasn't an evidence candle, guys, because the moment they made this low and pull back, first of all, let's look. Okay, if your neckline was here, okay, you can see maybe some people took this as the evidence candle. Yes, of course, if you took this is a good trade, okay, because I told you, wait for a good trade. But if looking at the candle itself, this candle is not an evidence candle. Why? Because look at it, just look at the candle itself. Let me zoom it out. If you look at the candle itself, it's not that big candle breaking out of the pattern, okay. It's not. Why? Because if you, where is the candle? Look at this candle. This candle resembles something like a hammer, okay. Why? Because it has a very big wick up. We need a candle that's a real candle. You see this kind of a candle, that's the candle we need as an evidence candle. A full candle, that is a huge candle that breaks out. But for this one, you can see there's a lot of doubts. Then they give you a hammer candle, the next moment they are back. You see, this is not the best candle to take if you put your line here. But once they've done this, then you bring your lines down, okay. And when you bring your line down, this is not an evidence candle, because it hardly broke out as a evidence candle. This is what I've been telling you. Sometimes they break out with a very big candle, but it ends up closing as a pin. You see on the close of this candle, it's still roughly inside. So that's not the best trade for the day. And then we had news lined up for late, okay. So on this day, obviously we didn't have those beautiful patterns. Again, if you saw maybe okay, I love the bodies. If you saw this, okay, let's go and take the bodies. Okay, if you saw this maybe as your rectangle, okay, that at least makes a lot of sense if you saw this as a rectangle. Okay, because this is an evidence candle, and this is the kind of candle you need. So if you took this trade, this is a good trade rather than this one. Okay, this is a good trade. Even if you lost it, it's a good trade. Sometimes you lose trades. As long as all your criteria have been met here, obviously it's a good trade. Okay, this one was good. Okay, but again, if you look at the pins here, you will see that okay, the pattern was like okay, somehow, because we had a lot of pins up here. But for me, it's a good one even if you took it. But it's just that for me on this day, I didn't take a trade. Okay, I didn't take a trade. There are trades you'll take and lose. So if you took this one as a trade, when you journal, obviously you can see that all the criteria have been met. But for me, the reason I didn't take a trade was because I was so concerned about the news that were coming later in the evening. Okay, because when we have news like FOMIC later in the evening, they can just mess up the entire day, or hold up the day, or do whatever they want, reserving the real moves for the FOMIC or for the big move. The same applies to days when we have non-form. They can just consolidate the entire day, act like indices. Even on currencies, they will do that. Just hold the level the entire day and reserve it for the news. So guys, when I have news, most of the days I don't feel comfortable taking the trade. Okay, I just feel more comfortable taking the trade after news. Okay, so that's something maybe that might work for you. When you have news later, like FOMIC news, that day might not be the best day to actually trade. Okay, so it's up to you how you set your rules. Here you can see this was not the best trap volume, because you can see they just trended down and the session actually opened inside. So when the session is opening inside, you can see the session is actually opening inside. The session is actually opening where? Inside. Okay, so when the session is opening inside, you don't know who is trapped. Okay, so yes, we can continue. But when you look at this day, I just chose not to take a trade, guys. I just chose not to take a trade. Okay, why? Because you can see they were not giving the best kind of trades on this day. Okay, so when we have news like FOMIC, I just want to be cautious. Okay, and yesterday was the best day out of all the days this week. Okay, out of all the days, let's look at yesterday. So guys, there are days when obviously you will have nothing to actually do. Okay, don't look for trading each and every day. If all the criteria are met on the day, that's when you can trade. But there are days when the criteria won't be met, and these are criteria for a reason, and that's what people tend to forget. These are criteria that tells us if we are gonna do something or if we're not gonna do something. So if they don't give you all these things, then you have nothing to do on the day. Okay, you have nothing to do on the day. So again, when we go to yesterday, you will realize that we can't identify trap volume because obviously they trended, then broke out. Okay, so we can't say who's actually trapped. But when we go to the session itself, you will see something very easy and something very better. Okay, look at this. Prices broke down. Oh, prices broke down. Okay, and then here, what did they do? For this one, at least they gave you a clean pattern. Okay, for this one, at least they gave you a clean pattern, but the trade actually happened later. But again, the pattern was very good. Okay, and for indices, yes, the trade can happen later. We already know that. Okay, but this was one of the best ones because they gave you a beautiful right angle triangle. So if you took anything here, then I don't know, because for me, I always say, and this is what I always do, this area has a name for me. Okay, I've actually given this area a name. Okay, it's called avoid zone. This is called the avoid zone. Always avoid what's happening here. So when you see a rectangle building up, this tells you that this is an area you want to avoid. Okay, this is an area you want to avoid. Just sit on your hands when they are building something like this, because you can see they have their high and they have the low, and they're just playing inside the high and the low. Okay, so as they are playing, that's where you can build, you can start drawing your pattern. At first, of course, it will be something like a rectangle, but then later you will see as they are building up the pattern that they are literally just bouncing up, bouncing down, bouncing up, bouncing down, bouncing bouncing up, bouncing down, bouncing up, bouncing down. So you can clearly see that, okay, this is a pattern that they are building. If you are patient, you will see these things. Okay, that's why I want us to go through testing together so that you can see. Always try to avoid what's happening inside. Always try to avoid what's happening inside. Okay, avoid what's happening inside, compare these things and take the easiest one. Okay, for someone this could have been the easiest one because the pattern was clean, but for me the easiest one was actually S&P. S&P was the easiest one yesterday for me, and I'll show you why. You see, we can't actually identify trend volume because they trended and then they trended. Okay, so for trend volume it wasn't that much obvious. Again, the session is opening in the middle, so you can't tell who is trapped. Okay, but we have other criteria to look for. Look, what did they do? Prices broke out, prices broke down. Okay, and then what did prices do after breaking down? They started creeping. What? They started creeping. Is this the first time seeing something like this? I love the bodies, I don't love the wicks. Is this the first time seeing something like this? I will ask you. Okay, is it? If it might be the first time for you seeing these things, but I really would doubt, because if you come, okay, we'll talk about this in a minute. If you come to your playbook, okay, I told you I've put all these things there. Here are the patterns, all the important patterns you need. I've put them in this playbook. Everything you need, I've put it here. But look at this, guys. If we go to page 8, you'll see something fascinating. These are the different kinds of trends. I told you, it's even part of the criterias. What type of trend do you see? You're not always gonna see trends, but when you see these trends, guys, they're gonna give you the easiest kind of thing. So always, every day, try to identify the trend that you see. Okay, when prices are busy, try to identify the trend that you see, because this is gonna give you the easiest kind of trades and save you a lot of capital. Look at this. Prices explode down, then they start creeping. This is a sign that they're gonna continue down, at least up to this point. So you're gonna measure, will you have enough pips, or enough of 50 pips? Look at this, okay, just remember, if, okay, let me take this. Just remember, if there's a big drop in prices followed by a creeping trend, it usually means prices will keep falling. So guys, here it is. Prices break down. Okay, prices break down. Then they start creeping. You just draw your line. Okay, and then when they break out, they're giving you an opportunity to enter. Okay, this is not rocket science, guys. This is not rocket science. Prices did what? Prices broke out. Yesterday was the best day, and if you missed it, I don't know. Prices broke down, started creeping. That's in your playbook. Some of you have this playbook, but you haven't really mastered it. Read it, master it. Okay, look at this. This was the big candle that broke out. The big candle. This is an evidence candle. Your stop loss is 15 to 25 pips. 15 to 25 pips. I took this one. Let me show you. Okay, let me actually remove this first, or let me change the colors, because I want to show you what I've actually taken, because this is the one I took yesterday. Okay, your stop losses are roughly 15 to 25. Okay, 15 to 25. Okay, so roughly above this candle for me. Okay, because this is the big candle. Yes, I love my stops inside, but look at this candle. They gave us a creeping trend. This is the first candle that broke out, so my stops were literally just about somewhere around here, because strictly 15 to 25. Okay, but I want my stops inside most of the days. Okay, but this one was just a dead giveaway. And besides, this kind of creeping trends are easy and free capital for you. Why? Because this one is gonna break out. Look, it went over 80 pips. Your 50 pips is somewhere here. Those who are greedy, obviously you hold on too long and you didn't get what you were looking for. Okay, that's why I always say, for me, it's strictly 50 pips, and you'll get your 50 pips almost every day, provided you don't get confused or you don't take losses before, you don't stay too long on the charts. to a point whereby when this happens, you no longer see it because you are frustrated or because of the loss you took early. This was a clean one. Okay, again on Nasdaq, you saw yesterday all of them just gave something very, very clean and easy. Okay, it's clean and easy. Yes, they ended up going many pips later, but for me, I don't care about that, because sometime I'm gonna get an opportunity to scale in, and when I do get an opportunity to scale in, I'm gonna get more than 300 pips on a move that goes 80 pips. Okay, some of you don't understand, but I've showed you before, when I scale in, I actually can take roughly 3 or 5 position on a move that just goes 80 pips, and that means if I enter 5 position 50, that's roughly 250 pips. So don't rely on the number of pips, rely on the quality of the trade. What do? Oh, I love this, guys. I honestly love this. Okay, what do they do? Okay, let's just do this. Put 5 here. Okay, I want to show you something. Prices break down. Okay, sorry, there's not much you can do about it when these prices broke down. Okay, there's not much you can do about it until they give you a pattern. Okay, at least for me, there's not much I can do about this until they give me a good pattern. Okay, so if you look here, prices broke down, then started creeping, okay, creeping, and they broke out with an evidence candle. This is exactly the trends I put in your playbooks. Okay, so you see, one trade will make you a lot of profits. This is the engulfing candle that broke out of your trend. Okay, and look at this, this was 14 pips. I chose the one on S&P. Okay, I chose the one on S&P because by that time that one showed up, this one had already broken up, so we were already here. So if I'm already here and on another one I'm just breaking out, obviously the one that just broke out will give me a good trade. Okay, that's why I took that one. Okay, this one, you see, 25 pips is here, but look at what they gave you. They went roughly 70 pips, but your 50 pips was hit in roughly 8 minutes. How beautiful can that be? You have been waiting patiently. Remember, if you don't have anything to take, there's nothing to take. You only take when now you have something to take. Okay, so look at this. They gave you your 50 pips quite quick. Okay, patience. Some of you were tired by this time. Some of you couldn't stay on the charts long enough because you were so tired, you were so frustrated. Maybe you took losses early, you were frustrated. You don't want to wait long enough on the charts. Guys, remember, your job is to sit on and watch your screen. If you don't want to put in the work, don't expect the rewards. So you see, these things are there. I tried my best, guys, to even put them in your playbook. The problem is you forget. Today they don't show you a trend. Tomorrow they don't show you a trend. This whole week they don't show you a trend. You forget about the trends. When they do, they play out exactly as I showed you, because that's how they're gonna play out every time they show up. Okay, yes, of course there are days when they will fail, but most of the days that's how they're gonna play out on everything. Currencies, they're gonna play out like that. Metals, they're gonna play out like that. Stocks, they're gonna play out like that. Everything you need, you have. Okay, the problem is you haven't mastered. Give yourself a weekend, just master that playbook. Make sure you understand everything. When you come to your charts, ask yourself, what kind of trend do I see? Okay, what kind of this is actually the first question you ask yourself. What kind of trend do I see? If you don't see anything, you might see a trend when they are trading, because obviously this is the kind of trend you will see when they are busy trading. But for the explosive trend, you're going to see it mostly before the session opens. Just be aware of that, because when you see it, it's going to pay a lot. So guys, you tend to forget, quick to forget. Okay, you are quick to forget. Just please make sure you don't forget these things, because they are going to be there each and every day. Play out exactly as I showed you each and every time you see them. Okay, this is easy. You see, most of the days you complicate things, you actually confuse yourself, where things are easy. Go and study your playbook. Everything is there. Look for everything I showed you there. If it doesn't show up, do nothing. Do nothing. It's okay to go a day without taking a trade. Guys, I'm not going to try to motivate you, because if you are in this business, honestly, you must be willing to put in the work. Okay, so we are done with this one. The next thing we're going to do is we're going to go through live testing together. Okay, but before we go through live testing together, let me just show you something very important quite quick. Okay, this is something I think people tend to forget. Okay, this is a book by Shabaka. It's called Stock Market Profits, not technical analysis and stock market profits. Okay, there's a difference between these books. Okay, this book has a lot of patterns. Okay, we haven't talked about these patterns. Okay, Shabaka has this book, Technical Analysis and Stock Market Profits. Okay, he has this book, okay, which is an important book that will teach you everything about patterns. People have been asking, where can I learn patterns? Get this book, Technical Analysis and Stock Market Profits, the real Bible of technical analysis, by Richard W. Shabaka. Yes, even the best guys have learned from this book. Even hedge fund managers have learned from this book. So the best traders you know have learned from this book. Okay, but the book that I'm showing you now is not this book. Okay, I'll come back to page 21. I'll come back to page 21 in a minute. Okay, I told you this this video is going to be a little bit too longer. Okay, because I want to show you something that will help you. Okay, so with this book, this is a book written by Shabaka, as you can see, Richard W. Shabaka. Okay, Richard W. Shabaka. It's just that this book was written many years ago. Okay, look at this. This is the stock market profit, not technical analysis and stock market profits. Here you learn a lot of things where one learns the right doors. Okay, and I want to show you something, because I told you about the psychology. Guys, there are two approaches when it comes to the market. Okay, there is a wrong approach and the correct approach. Please hear this. Okay, the wrong approach, okay, we may feel sorry for the tragic losses and the disillusionment, okay, which will soon fall to the lot of these first individuals. Okay, this simply means first traders. When you are a new trader, chances are you're gonna lose. Your first year might be a loss, and I want to be honest with you, your first year will most likely be a loss. Why? Because there's a lot you have to learn. Okay, listen, but we may also observe that the stock market is not so devoid of justice and logic as many people think and would have us believe. The stock market is not void of justice. Okay, listen to this, guys, listen to this. Why should the stock market pay back so much more to an individual in profit than he has put into it in study, in energy, okay, in thought, and in careful analysis? People don't want to pay the price. People don't want to put in the work. People think they're going to come to the charts, watch a 15-minute video, and then become profitable. I've heard many people saying this video is too long, this video is too long. Yes, it's too long because of the value I put into it. Okay, guys, if you want to be or build a business in this industry, you must put in all the work in. Okay, the answer is that the stock market will do nothing of the sort. It may tantalize him for a while with false success, but eventually it will exact its toll for this improper attitude and approach. Okay, our friend will eventually lose even his present capital, his estate, his fortune. So guys, you might think that you took a trade today and you are good, you understand it, even before you have actually studied. I show you a simple book. Get Shabaka's book, read it. Only few people are reading it. I give you a playbook. Only few people are reading it. I tell you, I spend more than 4 hours a day back testing. Only few people back test. You think you're gonna watch this and come and actually beat the market? You're never gonna do that. That's, I'm telling you. People look at this strategy. Yes, they see the simplicity, but they're only focusing on these two things. They want to wait for the equity, which is easy. They want to see the pattern, and that's when they're gonna trade. Okay, guys, there's a lot that goes into the strategy. What kind of trend it is, Where I trap volume, you must be willing to put in the work. You must be willing to put in the work, because the market is never gonna reward you if you don't put in the work. Okay, I told you I'll go through a little bit of psychology. After this, I'm gonna go through backtesting together. I told you this video is gonna be a little bit too longer. It's okay, but look at this. This is a bad approach. Okay, this is a bad approach. His experience will make him bitter if it does not actually wrap his entire life. He will blame the stock market. He will blame his advisor, whether he actually followed him or not. He will, okay, look at this. You are gonna blame everybody. You're gonna say this strategy doesn't work, this doesn't work, and then after thinking this strategy doesn't work, you're gonna go and learn 10 more strategies, and all of them do not work for you. Then you're gonna start saying, oh, this doesn't work, this doesn't. How can 20 strategies not work for you, whereas they are working for the person who's actually sharing them with you? The problem is not with the strategy. The problem is he will blame everyone except himself. And yet, if he were only wise enough to realize it, only he himself is truly to blame. I've seen a lot of you complaining and sending me things. Guys, you're not putting in the work. You're not putting in the work. How many hours do you backtest a day? Exactly. Have you read these books? I've shared with you many books. Have you read these books? Exactly. Okay, here's a playbook. It's only 53 pages long, with all the things you need. With all the things you need. Have you bothered to read it? Okay. Then you want sudden profits. You're not gonna get that. You're only gonna get from the market what you put into it. Okay, now let's go to the correct approach. Such a proper attitude is, listen to this, is simply the willingness and the sincere resolution to understand the market before one begins to operate in it. To give time. Wow, I love this. I love Shabaka, guys. To give time, study, thought and planning to his business, just as one would expect to do in any other type of a business. Okay, people think the market, because it's simply pressing sell or buy, it's easy. Guys, this is not easy. This has never been easy. 95% of retail guys are losing. This statistics is not a joke. Okay, as much as it looks easy, everybody on Instagram portrays it as something easy. It is not easy in any way. It is not easy. It is not easy. The best people actually spend a lot of time on their charts. The people you see today who are highly profitable, sharing all the things with you, they've paid the price. Okay, they have paid the price in study. They've paid the price in backtesting. They've paid the price on the day in analysis. You don't want to bother identifying trade volume before the session. Oh, something easy. You just want to come and wait for the equity to open, wait for the pattern, and then you see a breakout. You don't even care if it's an evidence candle. You want to enter. It fails, you start complaining. You don't want to stay or sit in front of your screen for roughly 2 hours if your setup haven't shown up yet. But you want to get the results. You're not gonna get them. You might open today and win. I might open today and lose. But because of the time and the work I put in, I know that my loss is a good loss. Maybe you don't know if your loss is a good one or a bad one. You just took a win. You don't even know if it's a good win or bad win. There are good wins. Wins that you cannot actually account for. Wins that you cannot improve for. Wins that you cannot say why you took this win. Those are bad wins. Okay, so those wins actually lead you to this person who takes profit, but eventually they are gonna lose. So guys, start respecting the market. The market seems easy, but it's not easy. The market is a huge beast. You are going against people who are willing to work. One reason I love SMB traders is because if you follow SMB, you can follow their YouTube channel. One thing I love about them is that those guys show you the work they put in. Not Jesse, sorry. I'm just okay. Mike Bellafiore, he always tells you that you are against these guys in his pro firm, guys who are there since morning all the way to the end of the day, just sitting looking for the best setups. And those are not just guys sitting in front of their screen. Those are actually guys who have the best tools. Okay, they have the best tools at their disposal. Those guys have the best psychologists at their disposal. There is this Dr. Steinberg. I think it's Steinberg, if I haven't got his name wrong. He is a psychologist who works with SMB traders. So you see, you are just an ordinary person sitting wherever you are sitting. You want to take from those guys who have all the things aligned, or all the favors aligned to themselves. Why? Because they have the best tools. Yes, they have a lot of capital to play around with. They can take losses, they don't mind, and they have the best psychologist. You are competing against those guys. So if you are not willing to put in the work, I feel sorry. You are still gonna keep on complaining and complaining and complaining, as long as you're not gonna put in the work. And I see this when people start complaining, oh, a 30 minutes video is too long. Hey, can't you make it 15 minutes? You want to learn this huge industry in 15 minutes. Good luck on that, okay? Good luck on that. Okay, so you must actually be willing to put in the time. You put in the study and the planning that it requires. Okay, if we put away this illogical and false attitude of something for nothing, whereby you just think like, oh, okay, I understand it. I've watched the course. That course was 1 hour. Now I mastered it, guys. It takes rough. It took Peter Brandt. Peter Brandt is one of the best guys. I love Peter Brandt, guys. Follow his YouTube channel, okay? He's one of the best. I love him. Peter Brandt is one of the most transparent guys out there. Most people are not transparent, but Peter Brandt is one of the most transparent guys. It took him 3 years. He was working with prop guys. He was working inside a prop, but it took him 3 years to make his profits. He was losing for roughly 3 years. And you think you're gonna come with 1 month and make it out here? Oh, good luck on that. You think you're gonna make it without having the advantage that Peter Brandt had, the tools that he had, the cycle that he had. He was learning from inside guys. He was learning from hedge fund guys, okay? You think you're gonna make it in just 1 month? All the best on that. If that's still your mindset, I wish you all the best, because chances are you're not. And when you don't, you're gonna blame everybody else and not see that you are the one to be blamed. He will blame everyone except himself. And yet, if he was enough to realize it, only he himself is truly to blame. He entered the market with the wrong attitude. Okay, he expected stock market operation to yield him a perfect, exorbitant and unjustified profit without adequate balance of effort or application on his part. So you don't want to play your part. You just want the market to yield profits without adequate balance of effort. You can't get it without adequate balance of effort in any business, in any endeavor. I mean, even if you're an employee, you still put in the work, okay? You still do your part. There has to be adequate balance of effort in every sphere of life. There has to be adequate balance of effort. Even if you are a Christian, to grow as a Christian, you need to study the Bible. You need to meditate on it. You need to pray consistently. You see, you must play your part. But when it comes to this huge beast where 95% of people are failing, you think you're just gonna make it by just putting in the work for 2 days. And then you feel ready. Okay, good luck on that. The problem is, you guys, most of you are following Instagram guys. Most Instagram guys do not even know how to trade, okay? That's the truth about it, okay? Do not be gullible. I love this book. If you can get it, guys. This book will show you a lot of things. It will actually prepare your mindset for the real markets, okay? This book is very, very good. And if you can get Shabaka's first book, that's the first book. If you can get this book, and McDouglas Trading in the Zones, and there is a book called The Sense and Nonsense of Markets. It's from that guy who wrote Okay. Sense and Nonsense of Market. It's from the guy who actually wrote Market Wizards. Yes. It's Jack Swagger. Okay, the book from Jack Swagger. These books will help you, but unfortunately, I know most of you won't even bother reading. Okay, so guys, you must put in a lot of work so that you actually accept the proper attitude of paying for success in security operation as we do in other lines of endeavors. Then we shall not only provide the practical basis for profit instead of losses, but we shall justify such profits instead of making our gains of dubious character, at least if not actually illegitimate. Okay, by merely changing our attitude and our approach to security operation, we shall make of the stock market a respectable thing of standing, okay, of legitimacy and economic service and just reward. Okay, your profits will be rewards, not luck. Instead of, I love this last part, instead of thing of degenerate gambling. Most people treat trading as a gambling. Okay, you think you're gonna make it without putting in work. Guys, good luck on it. Oh, this video is already 1 hour and I promised you that we're gonna do back testing in real time. Okay, I'll post that other one today. I'll post the video where I just we go through real time charts. I'll be back testing with you.